Oh, we are now. We're about to start straight. Okay, I'm like, I don't see it. Where we at? Okay, welcome everybody. Just give us, we're going to be starting in 1 minute. If you're tuning in on any one of our platforms, this is what technology looks like. If you're tuning in from Facebook, or you're tuning in from YouTube, or you're even tuning in from LinkedIn, do me a huge favor and hit that share button on the bottom, because sharing is caring. I always like to tell people, don't keep us a secret, because you know somebody else that wants to get this information as well. So we're excited. For those who joined us, also welcome. Good evening. Hello to you. We're so excited about our legacy building session. We are live. Do share. See that? I did the same thing. Facebook. Let's go here and tell folks we are live and you can share. All right. Glad to see everyone here right now. Uh-oh. Let's see. Go back. No, I didn't want to play that. No, I want to go to the page. Okay, there we go. All right, we got a live chat there. All right, we can get started. It's 6:32 here. Good evening, Dumfries and friends. Thank you again for being here tonight. Thank you for those of you who are tuning in online. I want to begin by saying what we're doing in this legacy building series is it's bigger than a class. This is and has been and will continue to be a movement. Every week we've been gathering, some of us in person, most of us online, to reclaim something that many families have never been given. And that's the knowledge, that's the tools, and really the confidence to build generational security. We're meeting at a time right now, if you've been watching the current events, where our country is wrestling with some real challenges. If you turn on the news, you see Congress has been debating people's livelihoods with these budget cuts for federal programs, fighting for funding, and families across America are wondering what protections will remain in place for them. I think just last week we were having a conversation early. National analysts warned that with the rising federal deficits, we're going to see a nearly $2 trillion where it could lead to a big shift in our deficit and how much support communities can really expect in the future. And while Washington debates over these budget, what do we see in our communities? We see groceries. They're starting to climb. We see in our community the rent is starting to rise, and most families are stretched thin. In fact, more than half of Americans, when you look at what's in their emergency savings fund, they don't even have $1,000 in emergency without stressing or hurting themselves. And so let's be clear. In times like these, your legacy cannot be left to chance. Your protection, it can't depend on the government, federal, state, or local government. Your family's future, it must have a plan. Your plan. And that's what makes this series, the Mayor's Legacy series, that's what makes it so important. Legacy Builders is about ordinary people taking extraordinary ownership of their futures. It's about creating security that doesn't crumble when the economy starts to shift. It's about protecting our household from the things that we don't see coming. And it's about giving every family in Dumfries and even our surrounding communities, regardless of your background, regardless of your income, regardless of your story and your family history. It's about giving you a chance to build something that lasts for generations. Tonight, I'm excited because we talk about a topic that most people only hear about when they're already in a crisis, and that's supplemental insurance. This is a layer of protection that keeps temporary setback from becoming a permanent loss. This is what helps families stay afloat when your traditional insurance that we've talked about over the last few weeks, when it just doesn't cover enough. And it's a tool that thousands of people wish they had before life happens. Because how many of y'all know life happens? Show of hands. How many of y'all know life happens? So tonight, you get to learn about it. Guess what? Before you need it. It's better to have it and not need it than to need it and not have it. And to guide us, we have someone in the building that is extraordinary herself. You know, our speaker tonight, I like to call her the real deal. She ain't Evander Holyfield, but she's someone who has spent an entire career not just selling policies. This is what I like about her. It's been about protecting people. She spent 13 years in specialized experience in insurance, over 27 years in sales. She's licensed right now in over 23 states. That's almost half the country. She serves currently as Aflac's public sector national practice leader, and she leads a national team of agents whose focus is on designing real, effective strategies that support families, local governments, and communities just like ours here in Dumfries. But beyond her professional resume, the thing that I think will impress most of you is she's a mother, she's a grandmother, and someone who understands what it feels like to want security for the people you love. She brings heart, she brings clarity, and she brings the kind of expertise that can literally change the direction of a family's future. So Dumfries and all our friends watching, please get your notebooks ready. Lean in. Remember, I want you to treat this conversation like it's a one-on-one conversation between you and her. Don't worry about whoever else watching. Don't worry about whoever else in the room. This is a one-on-one conversation, so she's talking directly to you. If she asks a question, she's asking a question to you. If you got a question, you ask it back. You put it in the chat. You raise your hand. We'll make sure we get in. So get your notebooks ready. Lean in. And without any further ado, please give a warm welcome to the incredible from Aflac. Quack, quack.
Welcome. Oh, thank you. Thank you. Thank you so much for having me. And this is a beautiful, beautiful place. Beautiful. And my job here is to educate everyone on supplemental health. And we say supplemental health, but since COVID, we realized it's essential. This is a need we need, not just supplemental. This is something you actually need to help put money back into your household and help offset all of your medical expenses. Because everyone feels like major medical, I'm covered. They're going to take care of everything. They pay for everything. I don't need it. And that's not true. From major medical to Medicare, they don't cover everything. You still have to come out of the pocket to pay for certain things. So when you have supplemental that pays you directly, it's not going to pay the medical insurance. It's going to pay you directly. You choose how you do the money or what you do it with. It's all about what am I and how am I going to take care? What if I can't work anymore? What if I'm off work and I have no more sick pay? Or what if they don't even cover me for sick pay? This is something that's going to help you cover your bills and take care of your family. So supplemental carriers, we have all different type of things, but I want to show you how you and what is supplemental, because not everyone understands what is supplemental. It covers the gaps. It covers the out-of-pocket expenses of what you pay. Not everyone is aware with their major medical. You're not aware of, does everybody understand what's their copay if they go to the emergency room? Do everyone know if they go to urgent care what their copay amount is versus their regular doctor visit copay? Not everyone understands that. So when you go to emergency room with certain supplemental policies, if I have to pay $150 out of pocket, I know I have a supplemental carrier policy that is going to give me maybe $150. It depends on the policy that you have, or they're going to give you $100 back that's going to come back to you. So you know it's going to offset your expenses. So using with Aflac and supplemental, we lead when it comes to what is supplemental, but I want to share with you when it comes to it's the direct cost. You're able to see that money is going to you directly. You were able to see in everything that I was just mentioning when it comes to supplemental, again, health insurance does not cover everything. Because you're going to find out, I'm going to speak to cancer insurance, that doesn't cover everything. So you're able to understand what covers your major medical and for Medi-Cal, what's not going to be covered. And you have to look at it now of what's going and changing right now in the world in our insurance. If our insurance, we see they go up from 8% to 14% in our major medical. And right now, we don't know which way it's going to go. We have different things. And what if we have Obamacare and what if that is taken? What are we going to do? If you have a supplemental plan in place, it follows you. You can go through work and if they offer it, or you can do it individually. With Aflac, you can do, and I would speak to the certain products you can do individual directly, but if you do it through an employer, just know all policies and products are portable. That means you can take them with you. You do not lose them. Okay? Not everyone is aware of that. So if you are offered a supplemental or through an Aflac policy through your job, just know when you transfer to another job, or if you're no longer working for that company, you retire, you take that policy with you. You do not lose it. You are not going to, and a lot of people are not educated. They don't understand. They feel like if I don't work for the company, I lose it and I'm done. Always ask. I don't care what company it is, always ask, is my policy portable when it comes to your life insurance and supplemental? So speaking to that, we have different products. And our number one of what Aflac leads with is cancer. Cancer is a huge, huge policy that I'm a firm believer in. I have 27 years of sales, and I also do believe in what I sell. And insurance is so important. And how I was able to believe in cancer insurance, I'm going to give you a real life story, a real time for my situation and my family. My mother was diagnosed with pancreatic cancer, stage 3B. The doctor said she wouldn't live past 5 years. It is going on 14 and a half years right now. She is still with us. So, but from that, she had medical insurance, but she didn't have a cancer insurance. And at that time, I did not know there was a cancer policy. I did life insurance and I was doing property and casualty, auto insurance. And then you get to know the nurses and the chemo doctors and you're finding out things. And the nurse said, "Do you have a cancer policy?" Didn't know anything about it because we had to sell property from our hometown to offset the medical expenses that we accumulated because of her being diagnosed with cancer, because medical insurance doesn't cover everything. So if she would have had a cancer policy in place, cancer, it pays, the carrier pays you directly, and it pays for every single thing you see a doctor for, from chemo to radiation, all your wellness checks, your anything, blood, taking blood, anything that you are dealing with cancer, you are getting paid directly to you. If she would have had a policy, we would not have had to sell a lot of our generational wealth and the things that we had as a family to offset our medical debt. And that's one thing when it comes to debt is what's the number one? It's because of medical insurance. And so when you look at it to say, how do I use it and what it is? And I know it's a lot of us would be like, I don't want a cancer policy. I'm jinxing myself. I've heard that so many times. I don't want to bring that into fruition. But when it comes to it, it's not. It's protecting you. It is protecting because that accumulates so many bills. She's on Medicare now, and she has a bill that she has to pay $800 for, that we as a family help, that Medicare does not cover, just to be able to keep everything going. So just to be able to know what the importance is and why. So you do have a cancer policy out there. You have an accident policy. Accident policy, no, it's not car insurance, accident. It is accident for if you have children in sports, or if you play sports, adult softball league or basketball or anything. It pays for any type of accidental injuries. So for example, if you have someone that's playing football or basketball and they injure themselves, they got to go to the emergency room. You're going to get paid a certain amount for the emergency room. They have to do an x-ray. You're going to get paid on the x-ray. If I have to get crutches, I'm going to get paid on my crutches. Everything that you've seen a doctor for due to an accident, you're going to get paid on. And it also comes with the accidental death life policy that's attached to it. So those are the type of things that you will have. So if you have active children that's in sports, or you're active and you know, for injuries, that is a number one, is very minimum cost to be able to use an accident policy to offset all of your medical expenses of what I had to pay to go to the emergency. My copay was $150, or your copay can be $130. It depends on the carrier that you have. But then you will have a peace of mind, like, okay, I'm gonna pay this, but I know as soon as I submit my claim and submit the paperwork, because I have this accident policy, we are going to pay you directly. We are known for our claims of paying between 2 to 3 days when it comes to an accident. Some of our accident policies, we pay the same day you submit your claim, as long as you have all of your paperwork that you turn in. So from your accident policy, as well as we have critical illness, that one was a huge policy that we paid over, our company alone, over $2 billion in claims when it came to COVID. Because yes, your critical illness, you're going into the hospital. You got admitted into the hospital. Everyone that's been placed on a ventilator due to COVID. Anything like that, when it comes to hospitalization, when you are there, we pay you daily that you're in the hospital. That is a hospital plan. That is your critical illness. And if you're diagnosed, if you have a stroke, if you have a heart attack, they pay out on lump sums. So for example, if I have a critical illness policy that I bought into that's $25,000, and if I got diagnosed with if I had a stroke, I'm going to get paid $25,000 up front. And then say later on, 2 months later or a year later, I have a heart attack, I'm going to get another $25,000. So it plays the increments of the amount that you buy into, from $10,000 to $75,000, depend on your carrier. They will pay you when those type of things happen. So that will help offset your medical bills. So those are the things when it comes to supplemental. We have also we have dental. You can do the supplemental, or we have actual dental plans. And we also have our life insurance. Life insurance is so huge when it comes to a supplemental plan, because not everyone understands or already knows what life insurance. You see, when you have life insurance, they'll feel like, oh, I have it through my company, I'm good. But do you understand, when you are employed and you pick up the policy because it's open enrollment time 3 times, 6 times your salary, but when you leave or you retire, does that policy go with you? It does not. So many clients of mine came to me that, I had one that was diagnosed with breast cancer. She was with a county for 42 years, had no clue. She bought into this life policy through work. And when it was time for her to retire, she could not take the policy with her, nor not another company would take her because she was already diagnosed. So that was considered a high risk. She was white, they would not take her. So those are the things where you have to understand, why is it important to have a different life carrier, supplemental carrier outside of work? Because when you're no longer with the company, you're able to have a life policy that's still going to cover you. And your rates will not change when you have it at the rate end. The best time for life insurance when it comes to, Mayor mentioned that I'm a grandmother. I have policies on my grandkids. And those are the things you're setting that up for them, because when you get a whole life policy or you have a universal policy or however you want to, whatever type of policy you have. So when they turn at the age of 16, I get a policy for not even $20 a month. And it's a whole life. When you have a certain type of policy like that, when it's time to go to college or to get their first car, you take the money out on that policy. And you're able to help your family and to be able to set them up for generational wealth, because a lot of things we're not educated on. Yes, Mayor.
It says, does the insurance pay anything towards the claim, or are you responsible since the insurance company cuts you a check?
So as in the insurance company, when you go and have for your medical insurance, they don't pay, your major medical does not pay you anything. But when you submit your claim, and if you have a supplemental policy, and say I was hospitalized and I have a hospital policy, I'll have the paperwork showing that what happened, the work that they did, and admit it. You submit it to, say if you have an Aflac policy, you submit it to Aflac, and then Aflac will calculate how much we owe you, and we will pay you directly. So major medical has nothing to do with it. They don't pay anything. We just pay you because you got this to close in the gap of what you had to pay to even be admitted to get your service through your major medical. Okay.
But I wanted to see if the questions could pop up.
So, and it's definitely, it's a good question, because, and just know with any carrier, all the information when you submit your claim, have all your documents. Sometimes it would take longer to, like, I didn't get my money for, it could have been 4 to 6 weeks. If you submit all your paperwork at the same time for whatever policy you have, you're going to get your money faster. That's going to come to you where you can have a direct deposit. Even Aflac, we have our own app that you're able to submit your claim through your app, through your phone, because everything is technology. You see, we're virtual now. And then you will be able to get that direct deposit. You're able to track it. You're able to see, and they'll tell you what's missing. But if you submit all your documentation the day you submit your claim, the quicker that you're going to get your money. So with that, and I hope I was able to answer that question.
He said,
Okay. So, that's a good thing. So when it comes to, and back to when it comes to the life insurance, just make sure and I've always asked, when you are doing your open enrollment, ask them, is my life insurance policy portable? A lot of them will say, yes, it is portable, but just know your employer is paying pretty much more than over half the cost. So your rates are going to be about 6 times or 8 times the amount it was, and it's going to be way too costly. So when you get it on the outside, you are able to cover a policy that sits you at a set rate that will not change. And if something happens, God forbid something happens and you have both policies, whoever is your beneficiary is left, they have 2 policies to claim out on at that time. And it's very important for me working with, with property and casualty and life, and, I'm mentioning, I worked with AAA when it was with life insurance, and it was real hard for me to see. Not everyone understood life insurance. Not everyone understood that it's important if you have life insurance. Please just don't tell your family members, I got a policy, baby, I'm good, I'm covered. Because you have to let them know what's the name of the company you have. You need to let them know if it's the beneficiary or someone that you trust, let them know who you have a policy with. If you're private and you don't want to let them know your dollar amount, you don't have to share that. But at least they will be able to know who they have a policy with and who to contact if something was to happen. Because, and I always say, they take money and we pay our monthly payments every day. And every month we make our payments. But if something was to happen and pass, do you think all these carriers are going to contact like, hey, wait a minute, what happened? Like, did they pass? You got money over here. Because if you have a life policy or universal policy back when you're in your early 20s, and now if I pass in my 80s, I paid it off. So there's no track of payments that I have made that they can see So for anyone to be able to see, wait a minute, let me look into the banking. Let me see if my loved one said they had a policy, contact the bank, see how far they can go back to track a payment with the carrier if they never shared with you the information who that carrier was that they had a policy. But if you have a policy, any policies that you have, period, please share that with your loved ones or whoever you listed as a beneficiary so they are aware who to contact if anything happens. So I have seen that so many times. I have seen where I was in an office and loved ones will come in and one spouse took care of all the bills. That spouse passed. I've had the other spouse will come into the office like, I'm not sure what happened. I don't know what we currently have. I think we had this company. Do we have a policy? Please let everyone know or someone know what you have, because it is very important to be able to know of what's going on with that. So we look at different things from your supplemental, from you have your term life insurance, your whole life insurance. You know, I have a question is, Jennifer, what is the difference? You know, and I didn't see if there's a question. I'm just saying this because this is something that might be on someone's mind right now. You know, you will get those commercials you see on different companies where it's like, death policy is only $7 a month. That's term life. That's a term life policy. But just know, yes, it is affordable. But when that term life, that 10 years up, if you do a 10 years, 15 years, or 20 years, or 30, some companies have 30, when that time is up, you have to get a new policy and it's rated at that age. The older we get, the more expensive it is. So when I'm starting my grandchildren off for everything young, that rate is not going to change. That $20 a month is going to stay there until when they turn 21, it's going to roll over to their own and they take over the policy with the same rate. So those are the things and I've noticed a lot of our communities, a lot of us do not know because we have not been educated on insurance and supplemental and why should we have it and what's the reason for it, and it is helping you. We also have short-term disability. That is something a lot of our companies do offer, short-term disability. There's some counties and cities and school districts that they have to purchase their own. And that is income that's coming in for you if you cannot work. So the example, the situation from COVID, if I had a short-term disability policy and a critical illness and our hospital plans, and say you have an accident policy, you would get paid out on every single policy. Every single policy of ours as well pays for wellness. What is wellness? Wellness is your physicals. You can go get a physical. You can, any type of physical, and they check, or, with women, we just got off of Breast Cancer Awareness Month where you have a mammogram. We pay you to go get checked. Every single one of our policies pay you. And if you have 4 of our policies and you had 1 physical, we are going to pay you directly on all 4 policies for that 1 physical you had, because that is for us to make sure we want you to stay on top of your health. We want you to stay on top of getting your physicals and make sure you're getting checked and are in good health. Yes.
Oh, there it is. Can you break down the different types of supplemental insurance plans in simple terms? Accidental, critical illness, short-term disability, hospital. Explain what each one of those actually does.
Okay.
Because you've been talking about it, but can you kind of?
Yes, I'm gonna go. Yes. So with that, and I'm gonna start with your accidental policy. Accidental policy is if you are active or if you have any family members or children, dependents that are active, that play sports, that is ideal policy to have. They pay out you directly if you have to go to the emergency room. So what I was mentioning, for example, say if I broke my toe, I hit the chair and I broke my toe leaving out of here. They cover you work-related or not work-related if you have an accident policy. I had to go to the emergency room. I got paid just because I went to the emergency room. If I have to get an x-ray because of my toe for them to notice that it was broken, they're going to pay me for getting the x-ray. They gave me crutches. I'm going to get paid for having crutches as well. So that is an accident policy. So if you have active members in your household as family members, definitely this is ideal to have. Okay. The cancer policy covers any cancer-related issue. So if you see a doctor for anything with cancer, you are going to get paid. And every carrier, and we have breakdowns where you will be able to see, we'll give you more information on your cancer, even on Aflac. If you go to aflac.com, they'll be able to show you the breakdowns of the payouts that they will pay for different things that is cancer-related. Our hospital plan.
Wait, what about on critical? So it's just cancer. What about like sickle cell or lupus and
cancer? So we have our hospital plan. So our hospital plan, if it's anything related and you're admitted to a hospital, say if I'm having a baby and I was admitted to the hospital, I'm getting paid every single day that I am in that hospital for delivering this child. If they keep me longer, I'm getting paid every day that I'm in there. So anything that if you are admitted into a hospital, your hospital plan is going to pay you daily, or anything that they have done in that hospital, MRIs, that's money that's going to go to you directly. We have our critical illness. Critical illness covers heart attack, stroke, any big major situations. Okay, heart disease or anything that falls under critical illness, where you can get a lump sum between, depends on your carrier, but if you get a $10,000 policy up to say 70 or 60,000, you can choose off of the rates of how you would want it. So when I was saying, for example, if I was to have a stroke, if I have a $25,000 policy, I'm getting $25,000 because I had a stroke. I have that policy, and no policy gets maxed out. It's not saying that it's gone. Once you use it, it's terminated. And God forbid, someone has a stroke 3 months later or say a year later, they're going to get another $25,000 because it was a critical illness. It keeps paying in the increments of whatever fall under.
$25,000 per year.
No, per diagnosis. So if you was to have a stroke, a second stroke, then a second stroke it's not going to give you the same 25, but it is going to pay you some of that part because we already paid out that big lump sum of that major situation. But if it's, say, you have from a stroke to a heart attack, then that's going to pay you another because this is your first time having a heart attack. So those are critical illness policies and how all of that works of supplemental. Again, the money goes to you directly. It offsets all of your major medical bills because, again, do not think your major medical company, your carrier, covers all expenses because they don't. Yes.
Explain the sickle cell. Sickle cell has been a big one in this community. We just had a delegate that lost a child with sickle cell, and there's a lot of parents in some of these school systems around here, they got kids suffering with sickle cell.
Yes.
Who could never get insurance?
So with that's a great question when it comes to sickle cell, and you have to look at it too. With all the different carriers, especially if you have Aflac through your company, there's ways when it comes to group products or anything, we have policies that will cover when it comes to things like that, from being diagnosed all the way up to if you're working with a group company and you're bringing in Aflac for the first time, we can work on group rates to work on getting guaranteed issue products for you, because a lot of us, we're knocked out when it comes to, because we're considered a high risk and we're not able to purchase a life policy or, like, say, a cancer policy because I was diagnosed with cancer, say, 6 years ago. But if I get it through my job and my job is offering Aflac and they are provided and they are getting group guaranteed issue rates, I will be able to get a policy. So those are the things where you look at it when it comes to a carrier. And believe me, and just know, remember I told you, the policy is portable. So if I retire, if I no longer work for that company, I can take that same policy with me. The only difference is it's not going to be payroll deduction. It's paying out of pocket. I just pay them directly. So what policies you purchase, Aflac standalone by yourself, not going through a company, is our cancer policy, our life policy, and accident policy. You can purchase that directly through Aflac, and you are able to pay that how you pay it directly to them. Our hospital plan and critical illness, all of that has to go through an employer. Okay, but once you have it going through an employer, again, it's portable. You're able to take it with you and you're set at a fixed rate. Okay, so the supplemental piece is huge. It's very important when you have that. Aflac is into dental. We have from the supplemental, we have dental plans, we have vision plans. Those are the different things, but everyone knows us from the accident insurance, leading with cancer, and just knowing what the difference is. Do I need it, and why do I need it? And the sad thing is, like I said, because we lead with the cancer, we are number one in the company when it's the cancer. But if we personally haven't had a scare or dealt with it within ourselves, we have a family member. And if it's not a family member, we know someone that has been affected with cancer. It is almost hitting every household in the nation. So when you have things like that, you have that policy to protect you. That is protecting you. And if I am not able to work, I know I have income that's going to cover and take care of my bills, because life insurance policies, that's going to pay if I'm no longer on this earth. But the supplemental is going to pay if I'm missed off of work and I can't work for 2 to 3 weeks or say for 2 months, depending on the situation. And that is providing income coming in to your household. That is helping you pay your bills, because that gives you a peace of mind. It gives you a peace of mind. And if you're diagnosed with cancer and you're having a treatment, there's no payment due during the time of we don't want you to worry about paying a bill. We want you to take care of you and take care of yourself. So that is the importance of supplemental. And we have another question. Are we good?
It says, to be clear,
yes,
there are plans available for people who already have medical conditions. And how do the waiting periods or exclusions work there?
Okay. So, yes, to be clear, there are policies, but it's through your employer.
That's the key.
Okay. That's very important just to know. It's not direct, it's through your employer. So if you're interested in want cancer and you work for a company, go to your head of HR. You go speak to them and say, hey, I would love to be able to, can you guys look into having Aflac as your supplemental? Can you be able to do that? Because, and again, it's voluntary. That's why they call it supplemental. Some employers put money towards it, but a lot of employers do not put money towards it. It's voluntary. It gives you the opportunity to have it available for you to purchase. But if you put it through your carrier, through your employer, then that's when we are able to work on guaranteed issue rates. So if you are currently with an employer and they do not offer Aflac, go to your head of HR and say, hey, can we, we'll give you my information, reach out, and we can set up to have a meeting to offer Aflac to be able to get guaranteed issue products into your company for you to be able to be available to have those type of products. But it has to go through an employer with pre-existing situations. Okay.
And I guess the second part was a waiting period.
So it depends on your elimination period. Yes. With guaranteed issue, a lot of our policies are not. Some of them, it might be a 30-day, but a lot of them, it depends. It's a case-by-case basis with the carrier and with the employer. So it depends. So I can't sit here and tell you, oh, no, there's none at all. I've seen some that there's no waiting period and some has been a 30-day waiting period. It depends on your employer, and everything's a case-by-case basis. Yes.
I have a question on when you were discussing that if you're in the hospital, they are not expecting you to pay a bill towards continuing the supplemental. Is it that while you're in the hospital, those bills per each month are omitted or just delayed?
Okay, very great question. So the question was, if you're in the hospital, and I mentioned about being in the hospital, I'm not able to make a payment. It's delayed, it's postponed. They stop it, but when it comes back on track, they would say, okay, this is the amount that is owed. And then so those are the things. So it won't cancel out, but I always advise, if you are hospitalized and you're unable to work, please contact the carrier and let them know. If you let the carrier know, like, hey, I'm currently in a hospital, I'm currently have this situation, the more the merrier. And it's better when they put that information in the system to be able to work with you, because we know if you're in the hospital, how are you going to be able to pay for it? Okay. And that's one thing that I love about the company. And I love what one thing Dan Amos will say, the owner, of just saying when it comes to Aflac. He rather us pay a claim than sell a policy. The reason why is because it's very important to be able to help the communities and help them get out of their financial situation. He wants us to be able to pay the claims and pay what's needed, because we know if I'm not able to work, that hardship is hard. It's hard to be able to say, how am I going, if I didn't have a short-term disability policy, how am I going to be able to pay this? What am I going to do? And we all know illness feeds off of stress. Absolutely. It feeds off of stress. And as the older I'm getting, I'm like, oh, I got to protect my health. You know, I have to pull away sometimes when it comes to, I can't let anything stress me out, because I don't want it to trigger anything going on within my body, my temple. So when you're able to have a peace of mind, knowing I got to get these treatments done, and I know that, all right, I don't have to make sure this is paid. I have money coming in to be able to take care of my family. Who's going to work? Who's going to feed my kids? Who's going to do that? And even on the cancer policy, if you have to see a specialist that's, 100 miles away, we pay for mileage for that on a cancer policy, because we want to help you get better. That's our goal. That's our job.
How soon after enrolling can someone use their coverage? Like, is there a waiting period for the benefits to start?
Okay. So if it's a standalone, if you purchase a cancer policy or accident policy or life of policy, they'll tell you it's pretty much a 30-day they'll let you know when it's effective, the 30 days. If it's an employer, if you're going through it's whenever their open enrollment is. So if my open enrollment is now, and they'll let you know that the policy will be effective as of 1/1/26. Or if you have your open enrollment in July, they'll let you know it might be effective August 1st. So it's whenever it depends on your employer when they do their enrollment, or if you do it directly with an Aflac agent, then they will let you know when it's effective. So with that in the products, again, I told you from my experience in sales and everything, I sell on what I believe. But I came more into the insurance because of my mom's situation. But not only that, it helps me help us, educate us on how it works and what's the important things to have. And if you look at it and you was to say, okay, I'm seeing how much this is, or I can only afford one policy. Jennifer, what one policy would you get? Me personally, I would get a cancer policy. Yes, I would get a life policy as well. Those are very two important policies of coverage to be able to have. And a lot of us by law, we don't have to have it, so we don't get it. With home insurance, we have to have it, so we purchase into it. Then we have some that would say, insurance is just a fraud. They just take the money. I don't even use it. But when it comes to health insurance, we all need health insurance. We all use it, and those are the things that it takes care of you for that just in case. Just in case something happens, how will I be protected, me and my family? And I don't want anyone else to go through of what I went through of we having to sell property and a motel, a family we own to offset the medical bills we had from my mom. So those are the things that it's very important of why should you do it? Why should you have it, and how important it is to be able to have it. And when it comes to our kids, we don't wait until they're 18 or 21 or 22 to get them a life policy. The sad thing is I just had to, went to a service for a family member where the baby was 8 months old. Family. So death, it comes in, it doesn't matter I don't care from your gender, your race, your age. When it's our time to go, it's our time to go. But we want to make sure it's covered. So we don't ever think a life insurance policy, we don't need it until we get older or when you get it through work. To be able to set our families up, the best way for generational wealth to come is getting it when they're young. Getting it when they're young. You can get a $1 million policy to cover your family. You can get a policy to cover your family. And then you can say, if I was going to be the one to collect the money from the family, each family member, okay, you guys all want to go in, I'll collect it and we'll put it towards this $1 million policy. Then as it gains interest, what can we do? We can take money out of it. Let's go use this and we can go buy property and then let it gain interest again and keep going. And that can keep the generational wealth going within our families. And that's how we can use the policy and if when we need it. But it's not just, and depending on your policy, it's not just when someone dies. You can use it for the living. So those are the things where we find out more. And I'm speaking to that because it falls under supplemental. But I know you guys have this great series that's going on. I love it. And when Mayor reached out to me, I was excited to even come out here. I flew out here from California. So being able to help and educate, because I'm very passionate. And this is something that we need. Just our community, period. We need these type of things because I don't know about you, but I'm tired of GoFundMe pages. I'm tired of seeing a car wash or they're sitting on the corners, collecting money at the stop signs because we don't know. We don't know any better. We weren't educated on life insurance and how that works and how you can get a little policy for a little of nothing. So these are the type of things that helps. And I'm so happy to be able to be here in front of you to be able to share that. And do we have another question, Mayor?
Yeah, do policy change as you get older? Do the premiums go up? Are there policies that lock in at lower interest rates if you get them earlier?
Yes. So on policies, the earlier you get them, you're locked in at that rate. When for Aflac, yes, you are locked in at the rate or whatever age you are at that time. It will not change. Now, I'm speaking to Aflac. I can't speak to every carrier, but that is a great question to ask. Whatever carrier you choose to go with, you ask them, will my rate ever change? Because a lot of them themselves, I'm going to be honest with you, they don't share if it's going to tell you right away. If you ask the question, they'll answer it. But not all the time will they share that with you later because they already sold the policy. And then you ask the question after they sold and be like, well, if I would have known that, I wouldn't have purchased it. So always ask those questions because you want to know, because not all, I didn't say that everyone, but I'm just saying not all gives you all of that information when it comes to sales. And when you look at it and you will say, you're just trying to sell me something. Ask all the questions that you have. I don't care who it's with, ask the questions. See how it can help you. But that's a great question to ask. And then I should say, always ask that question. Will my rate ever change?
I said that's exactly what they were interested in.
Yeah. So, all right.
More financial questions here.
Okay.
Hold on. Sorry. It says, how does supplemental insurance help families keep their savings intact instead of draining their bank accounts in an emergency?
Mm-hmm.
Yeah, that's a good question.
Yeah, that is a good question. So that is where I was saying when you have the type of policies all in place for you have a critical illness, a hospital plan, say a cancer plan, say if I have those three major plans, I know if I'm hospitalized, say for cancer, I'm going to get paid out on all three policies because they all coordinate with hospital bills and certain different things. So when you look at it, so then you'll know, okay, this income is coming in. And honestly, you might receive more then you actually had to come out of the pocket. I have seen that plenty of times. And if you currently have an Aflac policy and you forgot what you have and you never claimed a wellness, you don't lose it. You just need to submit the claim, and you need to show proof that, say, if it happened 3 years ago or 2 years ago, they will back pay it as long as you show proof that you had things. So you won't lose the money. So I have helped someone where they completely forgot they had it. They had knee surgery and all of this. They end up getting a $17,000 check. Jeez. And I always say with employers, and I'm always very transparent and I'm real, they quick to take that money out your paycheck. So you need to make sure you claim and get your money back. So that's how I look at it, to make sure you getting that money coming back, because they owe you that, because they taking your money every single month. So get your money back. So those are the things, and it's you can end up getting paid more than what you had to pay, because if I have a great PPO plan and my out-of-pocket is not that costly, Aflac might be paying you more than what you even had to pay to go see the doctor. And that's money you can put aside. You can do whatever you want to do with that money, but I always say we use money and we look into investment and how we can invest to make sure, again, I say life insurance as a whole, you do $1 million policy, however you want to do it. You can work your way up, but that can do generational wealth. And it gains interest, depending on the policy, is gaining interest for you to be able to keep that wealth going for your family.
Yeah, since many of our families are living paycheck to paycheck, so they're trying to figure this out. How can this supplemental insurance help them really stabilize their monthly budget, especially during an unexpected medical event or missed work? I know I talked about people not even having $1,000 in savings accounts. So, how can this help stabilize their budget, if they miss work or expect? And I think you explained it, but you can. Yeah.
So it is the best, honestly, to get a lower rate than going direct. You get a group rate. If you're currently employed and they do not offer Aflac, go to your head of HR or who's over your benefits and say you're interested in, could they bring that to your company? Because you were able to get a lower rate than going direct, because it's pretty much a group rate is half the cost. So you're able to do that. And remember, and I was telling you, it's portable. You can take that policy with you later with your rate, but then it will go into a traditional rate. If you leave the company, you would no longer. So those are the things where, if I was to have, and my family's on a fixed income, you look at it and say, out of all policies, which policy will be best for me? If I can only buy one policy, if it's a cancer policy or if it's a hospital policy, if you have active children, accident, yes. If you can do accident and the hospital plan, absolutely. Because a hospital plan, if you're diagnosed and you have to go to the hospital for anything, even if it's cancer, it's still going to pay you. You might not have the cancer policy. It won't pay you as much as a cancer policy will, but you can build your way up to, like, okay, I got this one locked in. Now, all right, we got a little bit more income coming in. We're going to invest in another policy. So, and then if you have one and you have your kids, they cover the dependents up to the age of 26. Some states is different. Just knowing your kids are on your plan, they're able to be grandfathered in and spin off into their own plan with your rate. Okay, so that's where you'll be able to know you can spin them off at that time. And then, the agent at that time will give you all of the information of how you are able to do that as well. If you have a college student, yes, they can be covered on your plan. They can be covered on the plan. It's, and dependent, our loved ones, say our seniors, our grandparents, unless we have, usually they're on their own. And a lot of employers do not cover that unless they are considered a dependent. They're financially, you're on with them. Do we have another question?
It says self-employed business owner that wants to do the term whole insurance on household members, more cost effective as a business or sign it up as a private family plan. So it's a self-employed business owner. They want to do the term whole insurance on the household members. Is it more cost effective as a business or signing up for a private family plan?
If it's just you, it's no cost difference. If it's just you and your business, say if I owned my business and I want to cover my family on my plan, I'm an entrepreneur, I have my own business going, versus it's not going to change. It depends on your employees though. The more employees you have, the more you can get for like a group rate. But usually group rates is 100 employees or more. So if I have less than that, there's no price difference. It's going to be the same as going direct.
Yeah. So I think he said it's for his wife and kids.
Okay. Yeah. So you can still get, for yourself, your wife and kids, you still can get a policy. It's just going direct, but it will cover all of them, but you won't be able to get a group rate unless you have 100 and more employees.
Got it. There was a question: when a family invests $20 to $40 a month in supplemental insurance, how does that compare to the potential financial loss of not having any type of protection?
How would it compare?
Yeah, so I guess if they don't, it's the opportunity, like if they invest the $20 to $40 versus if they don't, like how does it compare to the potential financial loss? Like what do they have to lose if they don't have any supplemental? I guess you give some of those examples you gave earlier.
Yes. So when it comes to, say if I have my carrier and I'm going to the emergency room, and they're charging me, again, the hospital, $150. That is where I know if I have a supplemental plan, I'm going to get some of that money back, or maybe all of it, or, it depends on what your copay is. That money is going to come back into your household. So you might have to, you putting it up front, say for the first day or two, depending on how quick you can put your claim in, say within 7 days, I'm going to get that money right back into my pocket, into my household. So that is where it comes in when it comes to that. Say for your critical illness and all of those policies, the major policies, you do have to have health insurance to partner with it. You have to have health insurance. If you do not have health insurance, your major medical, they will not let you have that policy without having a major medical policy. Okay, because again, you remember, it's closing the gaps. Supplemental, which I say is essential, is closing the gaps. It is helping you put the money back into your household that you just had to put out. And I would say with all of your major medical and you're getting your benefits through your company, find out and just know what your copays are. Because I can sit with a lot of clients and a lot of them do not know. Like, how much if you go to the emergency room? I don't even know. And then when you get to the emergency room, you're shocked. Like, what? How much do I have to pay? I have to pay $360. Like, what? Don't get shocked. Find out. Ask the questions. Ask, how much am I going to have to pay out of pocket if something was to happen? Ask, and ask those carriers, and you have the agents that helped you enroll, or if you have self-enrollment through work, you have your HR that you go to and you ask them those questions. What do I have to pay out of pocket if an emergency is to happen up front? Because that is where, yes, again, remember I was telling you, number one debt issue in the U.S. is medical expenses. So this is what helps you, where this money comes to you directly and it doesn't go to the carrier. Okay. So do I have any other questions? We're good. So just looking at the importance of it, just understand what the policies are and why you should have them. And I am not one of those that say you need to go buy all of them. Whatever fits your household. If you have a short-term disability policy, you get the short-term disability policy. If your company don't pay for short-term disability, if you're off work, if they don't cover you, you're going to need to invest in a short-term disability. But then once you retire, you no longer need that policy, right? So we cancel that policy, because I'm no longer working and I no longer need that policy. It's the just in case. So finding out, and why I'm here is to be able to help us and educate us of why we need it, what the purpose is. And again, if you're able to look at it, of all policies, and I'm on a fixed income, what policy is best for me? Look at your family dynamic. See what's needed. If you have active children, definitely get that accident policy, because if they play a sport, how often do they get injured? From basketball to football, even us ourselves, you get on the ladder. I was just moving last week and my elbow was killing me. I don't know what I did. So those are the things where that can pay me going to go get seen on the injuries of just me doing physical moving. Again, it covers you on or off the job. Is there another question or?
Yeah, some people feel like they made it this far without coverage, so they're probably fine. What would you say to someone who thinks insurance is something they'll get later?
That's a good question. And if you remember what I said a little bit earlier, if you were on the dialed in, it's for that just in case. Because just like Mayor said at the opening remarks before you introduced me, it's better to have it now than later. Because if something happens later, it's too late where you can't get it. So for example, with my mom didn't have a cancer policy. She cannot get a cancer policy. It's done. She was diagnosed. So it's always for that just in case. And that's where I just said it's, and I know it's times where it's like, I don't know if I can have the expenses. And look what's going on now with our food, the increase. And now we know everything is increasing. The cost of living is more. So looking at those type of things, I understand that, but just weigh it. Okay, how much? Look, these are the policies, sit with an agent, talk to someone. These are the policies I'm interested in. How much would that be? Or out of all of them, then you slowly, gradually choose one to be able to work on. If you fit like, okay, I can hang, I can do this, then you invest. I'm not saying go get all of them right now, break the bank, and then you can't pay for it. So, and that's just I hope you don't ever sit with an agent that tries to sell you everything at once, say you need it. You need to go off of your pocketbook and what you can afford. So those are the things where you look at it when it comes to supplemental coverage of if you haven't had it this time, that is great. Nothing has happened. You don't have no debt or anything. But none of us wake up saying, I want to go get in an accident today. It's that just in case. We don't wake up saying we want to go get injured. We don't wake up saying I want to have a heart attack. I want to have a stroke. But if I can't get the policy later if any of those conditions happened. So you have to have it before and not after, because you're not allowed to get it after unless you had it and you go through an employer and they have a guaranteed issue policy. Then with a pre-existing situation, then that's something that you might, but not all employers offer that whatsoever. So those are the things of why you should have it. It's that just in case, because we never know. And I always say not one day's promise for none of us. Yeah. So we don't know. We have another.
Yeah. Is there a list of for what qualifies you under each of the types of supplemental insurances? So is there a list for what qualifies you under each one of these types of insurance?
So if you go onto Aflac.com, you're able to pull up, you'll see the whole product menu of what you'll see, and you're able to click on the description of what it pays, everything. It educates you on that. But Aflac.com, or you contact with an agent, they'll be able to share everything on there. But we do have it online.
Yeah. Now, this one says, what about the people who feel like they're too late to start planning or building security? What guidance do you give to someone starting this journey in their 40s, their 50s, their 60s, and even their 70s?
Okay. That's a great question. Like I said, on our life and policies or things, yes, the older you get, the more costly it is. When you look at it and you be able to see if we're getting a policy at our age and I'm getting it in my 50s or I'm getting it in my 60s, it's going to cost a little bit more than if I want a $25,000 or $50,000, $100,000 policy. Like, ooh, my payments are crazy. Then that's the time we're going to have to say, all right, let's invest in a term life policy. But the term life policy only covers you for that time. If you remember, I said from 10 years, 15, 20, 30, however the company will have it. And that's one thing that I kick myself in the butt now when my mom was diagnosed. My mom told me she had a policy, she's good. Okay, she's great. They're great. I didn't know my mom had a 30-year term. Her 30-year term was up 2 years ago. So she paid into it that whole time, so we don't have a policy on her. My father just passed last year, we had something on him that I was able to use some of that policy to cover her burial when that time comes, God forbid, no time soon, that I was like, okay, how can I utilize to make sure she's covered with this one policy? Because not one life policy carrier would take her because she was diagnosed with cancer and she had a 30-year term. So if you have family members or your parents says, I have a policy, ask them what kind of policy, because I didn't. I just knew she was good. My dad had a full whole life. I assumed she did too, and it was a 30-year term. So, but when if you can't afford a full life policy and a whole life policy, invest in a term life. Invest in a term life policy. You know, we have them, our company, we have them, and we always see that you see that commercial where it is, we have a question behind you. Yeah. So we have that term life and we have that question where they sit there and be like, oh, death policy, $7 a month. That's just a term for a certain amount of time. So just be mindful what it is. Yes, it is cheaper, but just know if I get it now, 10 years later, when I'm 60, it's going to be more expensive. But if something happens in between there, I can't renew another policy.
Yes, ma'am. In regards to term life policies, can you explain to the people that you can actually buy a term and get paid up premium option as well, or return a premium as well, and what they can do with that return of premium?
Absolutely. So if I have a term life policy from 15 to 20, before it terms out, the company should, again, I say should, usually they will, somebody will contact you and let you know your policy is up and you can roll it over into a whole life policy. You can roll it over into something. So that is where you look at it and you can use whatever you use that money for. If you're able to take that money out and for what I was saying earlier in investments and doing certain things with the money, but you can buy into a full life at that time because they will, hey, your term life is up. Would you be interested in rolling it over to a full life? And we roll it over and the money that you put into your term life is going to go into your whole life policy. So they're going to move that money over into that policy. So when you look at it and just know, you can have more than one term life. You don't have to wait until your term life is up. So for example, if you have a term life policy, a 10-year policy, and say in 5 years, and I did 20,000 in 5 years, I'm like, okay, it's not up, but I want to invest in another term life policy for another 15 years. You can purchase another policy where they're overlapping each other. So when that 10 years about to die off, and especially when I'm looking at it like, all right, well, I'm going to be 5 years younger, so I'm going to get it at a cheaper rate. Let me get a 15-year, or it depends on the company. They'll tell you. The max we can give you is, the older we get, because you're considered high risk, they're not going to give you no 30-year policy. They're not going to give you a longer policy. They're going to give you a short term. So they'll say, we can give you another 10-year policy or 15, and then I have two policies at the same time that I'm covered on two policies, say for that 5-year period in between. So there's ways how you can work around it and do it. But that was a great question of saying the carrier will contact you, letting you know, hey, you have this 10-year policy, it's up, we can move you over, buy into a full life policy, and then that money that you paid into is going to go into the full year, the whole life policy that gained interest, and you can take money out on that off of your own policy.
This is a great question. If I'm traveling international and I get hurt, am I covered under this insurance?
It depends on the carrier. Some of them, no. When you're out of the country, a lot of them do not cover, but it all depends. Again, it's a case-by-case basis with the carriers that you go with, but a lot of them do not cover out of the country.
So specifically, they say do Aflac.
So with Aflac, out of the country, no. But I will say we have Japan. And you guys believe it or not, or Japan, Aflac is bigger than our US when it comes to Aflac. So we have coverage in Japan, but on the other countries. But again, it depends on the situation. Say if a critical illness thing happened and you're on the trip, that it does help. Your major medical brings you home, and then we will be able to take off. We will be able to pay once you get into the US of your claims on what happened during that time.
So I think that leads us into this next question. It says some people feel like the whole system isn't designed for them, or they worry that they'll be denied. So how do you help this underserved community overcome that fear and step into confidence in getting some type of policy?
That's a great question. And that's why I'm here. And that's why your mayor is putting this on, and putting this is educating you on how insurance works. And I see with the trust and the deeds and how all of that works. And we have to put that fear aside. And we have to know that I'm protecting my family. And one thing I refuse to operate is on the fear. And we know we haven't been educated on this type of stuff. Again, like I was telling you, like I said, I'm tired of the GoFundMe. I'm going to help or assist, but if we're not educated and we don't know what we can do to be able to help and get that generational wealth when it comes to policies that gain interest and we do those type of things, that is going to be able to help us, but it has to start somewhere. If I'm going to continue to be fearful of being able to invest in my family and insurance, that's going to trickle down to my kids and my grandkids. Everybody is going to be fearful of it. But when it comes time because it affected my household, it affected my family, because of that happened, I was one that I don't want this to happen to anyone else. And I want to be able to at least share the knowledge that what I know to be able to help them so they don't have to go through what we went through. So if I have a $60 cancer policy, I would have paid $60 a month for my mom to have a cancer policy rather than us having to sell all the stuff and, land that we had to offset her medical expenses because of the cancer. So you look at it and say, what is it worth? And then what if we didn't have land to sell? What if we didn't have that? They would have been in debt for a long time when it comes to that. And they won't be able to do anything. And then what do? We have houses and we lose them. You lose your house. And that's one thing that I'm glad I even said house. How do I know how much of a life policy should I start with? You look at it and say, depends on, again, case by case basis. If I have a fixed income and if I only can afford a $10,000 policy, by all means, I'm just going to get it right now because at least they have something rather than nothing. But if you're looking at it as a family, I'm married and I'm having my kids and family and I just bought a house, you want to look and see what the value of your house and what you owe on the house. So if I owe $350,000 on my home, I want to at least get a policy that's going to cover to pay off my house so my significant other does not have to worry about paying a house note because I'm gone. So you are able to look at those type of things to be able to figure out how much. But again, if you can afford a policy like that to cover your expenses, to make sure my family, as long as my family is taken care of, my house is paid for, I'll be at peace. At least I have a policy to cover that. But if you're not able to afford it, it depends on the rate and the age that you get. Then you'll go to a term life or you get something smaller than that, but you work your way up. But you always want to make sure, and a lot of us, a peace of mind of our families to make sure, okay, God forbid something happens to me and I'm no longer on this earth anymore, because again, we all know no day is promised for none of us. What's going to happen? Will my family, with my kids be able to continue to survive if I'm not here? Any other questions?
The last one here. It says, if supplemental insurance isn't part of a wealth building plan, and how can families keep their assets, savings, and long-term goals on track?
If it's not,
He said it's not.
I'm like, if it isn't a part of with supplemental, again, like I said, with supplemental, I say it's essential. If you have an employer, I'm telling you, please go to your employer and ask them to please offer supplemental for you so you're able to get group rates, so you're able to do that. And if you can't do that, then I would definitely, for when it comes in investments, you have your IRAs, you have your CDs, you have things that you can invest and put money in where it's going to gain interest within 8 months or 10 months. I personally don't do those. And licensed to do it, I personally do not do them, but please find out who is invested in it. I'm not sure if you guys had a representative speaking on that or how that will work, but that is definitely something I would say look into, because you want something that's going to gain interest where you are able to make money off of your own money. So those are the things that I would say, if you're not offered and you can't, from the supplemental and you don't want to do that, what other things can you do for investment that's going to gain interest? You want something that's going to build, not just sit there. You want it to gain interest. And, it's no difference from you have your 401ks or your 403bs and different things. You want something that is going to make money for you. And that's one thing with me. It's just like, I'm constantly like, where can I invest in my family? What is going to help me build generational wealth for my family? And those are the type of things that will help. And those are the type of things that you can do to be able to invest in your family that's going to gain interest. So those are the things that I would say they can use to help, because who knows? Who knows how long if we're going to even have 401k available? And I always look at it and say, if you don't have access to a 401k, or some of us are not able to afford to put money into a 401k, how am I going to survive? How is my family going to survive? We always need to think of those things ahead of time, of being able to see of what can I do? If it's investing in property, if it's something that you have a value of being able to leave behind for your loved ones, to be able to, if I have a home, you're able to take out a loan on it later on. You're able to do types of things. But some of us are not able in a situation that can purchase a home. But you can put money into a CD. You can put money into and look into those type of things to be able to see how you can make money off of your own money. And again, with that part, I'm not a seller on that one. I am not the specialist on that, but definitely reach out to someone that is, and they can educate you on that of what's the minimum amount that you can put in there and how much can you gain interest in. Some of them you can put it in there for 8 months and make money off of it. I see some that buy into stock. I don't know how to do the stock thing, but I have a lot of friends that is into the stock market. It's just finding ways of that you can make sure you are taking care of your family and generational wealth that's making money off of your money. Any other questions? We're all good? All right. So again, that's all the supplemental carrier insurance of things that we have. Those are the products, and I am thankful, and thank you so much for having me. It's been such a pleasure. Gave me a tour of the city and being able to do different things, and it was wonderful being here. I was able to put on my winter clothes coming from California. I was like, the weather, let me change my gear. So those are the things of just saying, this is how you can help and how it benefits you and your family. And please don't wait until it's too late. Please don't wait, because that's what we're here for. We're here to educate, because a lot of us are in the situations because we didn't know no better. And now you have the opportunity where a mayor is helping you learn, and you can't say you didn't know and nobody didn't tell you. And if you're unable to do it now, please share it with your grandkids or share it with someone that is younger that can start it for your family if you can't personally start it. So these are things that I'm saying. My oldest is 30 years old. It's just like, okay, how to set it up. I have an 8-year-old grandbaby. I have a 5-year-old granddaughter. So those are the things, how can I make sure I can set it up successful for them? So those are the things where thank you for this opportunity. Thank you for allowing me to be here. And I hope you guys have learned different things. I hope I was able to give you a different insight of all of that. But I always say, don't just go off of what Jennifer Spencer just said. Educate yourself. Do your research. Look and see what's best for you and your family. So again, thank you so much. So to contact me, my Aflac email is Jennifer Spencer, first name and last name all together, no period, at aflac.com. And you can contact me and I can get an agent connected to you or the closest one to you and be able to set you up with an agent to give you more information and to be able to really talk about how we can help you and your family. If you have a business, they can talk to you as well. So just email me directly. Again, Jennifer Spencer at aflac.com. And that was my direct email. And then I will be able to connect you with an agent that's local to you to answer any questions to get you set up with Aflac. Any final questions in here? No? All right. All right. Thank you so much.
Great conversation.
Thank
Appreciate
you.
it. Y'all give Jennifer a round of applause. Drop some emojis in the chat so she can see a nice little thank you up there in the chat. Listen, Dumfries and Friends, again, thank you all for being a part of tonight's really legacy builders session there. We talked about tonight, it wasn't just about insurance. What I heard Jennifer talk about, it was really dealing with security. It was dealing with stability. And it's really dealing around what's the theme of this whole thing. It's about legacy, right? Because at the end of the day, we all want the same thing. We want to protect our families. We want to be in a situation, if something happens, to keep moving forward. And to not be knocked off track when life happens, when it begins to kick us sideways. So tonight we learned that supplemental insurance, it's not something set aside for the super wealthy or the ultra. It's not just something that's luxurious to have, right? Supplemental insurance is a safety net that keeps our setbacks from really becoming a crisis in our life. And that's good. We appreciate that lesson. It's a shield for our community, especially the ones that's living from paycheck to paycheck, to be in a situation where they can have some supplemental income happens if something happens. And so and I hope that you heard something tonight, that you got an idea, that something stimulated. You maybe have some more questions. And you know what? You think about it and you say, you know what? My legacy deserves protection. And you not just get this information and do nothing, but you begin to really take action. That's why this Legacy Builders series, it matters. That's why we've been showing up every single week to do this. And we may kick this series off again in the new year, just to restart it and to come back again. Because no matter what's happening in the world right now, rising prices, you look at the economic uncertainty, the changes that's happening in Washington, D.C. right now, you still can control how you prepare your family for the future. Like that's what you control. That's controllables. You can't control what everybody else does, but you can control how you plan for the future. Like if you fail to plan, you automatically plan to fail. So again, I want to thank Jennifer Spencer for breaking this down with clarity. Thank you for breaking it down with heart. Thank you for, really flying out here as one of the national directors to really be able to explain this. You gave our community today some real tools, some real information, and you gave us, I think, what we need to stand on it. So we appreciate it. Thank you for doing that. And to everyone here and to those who have been watching online, I want to let you know we got one session left. Next week, we're going to give out certificates and we're going to give out rewards. I think next week we're going to talk about filling out your will, getting your will done, our online vault to keep all of your documents safe. And we're going to give you some seed money towards being able to get in that vault just for being in attendance and just for being here. So next week is going to be our final session. I think we wanted to move it to Tuesday and give you the certificates, but I think we'll get emails out to make sure. So thank you for believing in this work. Thank you for investing in your legacy. And thank you for helping us to build a stronger, wiser, and a more empowered Dumfries. This is about your economic mobility. You know, a lot of communities usually don't have these topics come up. It's all gentrification happens. Prices of houses go up, communities get built out. But I think it's important that we build our workforce, that we build our own legacy, and we really bring in the tools so our communities' legacy, that their income, that their finances, that their legacy all grows at the same pace of inflation in this community. So this has been one of those things that's very important. This is about controlled, help me out, Nate. Yeah, controlled regeneration. Yeah, Nate, help me out. It's all about controlled regeneration, how we control this and really regenerate that. So good night, everybody watching. God bless, and we will see you next week. Stay tuned for all the announcements on all our social media. You can go back and watch the replay and take away your notes. God bless y'all, and good night.